Let's start. Done, ma'am. First of all, we will see CGST Act. CGST Act 2017. S for 7, S for supply, section 7, scope of supply. 7.1 talks about supply includes. 7.2 talks about supply excludes. 7.3 says government has power to notify certain transactions as goods not service, service not goods, and section 7.1a says that you simply refer to schedule 2 to see what is goods and what is services. Then section 7.1 supply includes says that what if supply is done with consideration or without consideration. For without consideration, we know section 7.1c read with schedule 1 says that there are only 4 activities and 4 paras which can be considered as supply even without consideration. Permanent transfer of business asset on which ITC is availed. Supply between related person, distinct person in course furtherance of business. Exception is employer-employee gifts up to 50,000 per annum. Then we say agent selling goods, sending goods to principal, principal sending goods to agent. Only goods are covered here, not services. And then if you are doing import of service, then it has to be for business purpose and plus it has to be from related person or own establishment. Then in that situation, we say that these 4 activities even without consideration are considered as supply under GST. Talking about with consideration part, section 7.1a says that all forms of supply of goods, services or both such as sale, transfer, barter, exchange, license, rental, lease, disposal, everything agreed to be made by a person in course furtherance of business is considered as supply only. 7.1b says that if you are importing something, importing services, why only services, ma'am? Because goods are covered under customs. So if I am importing services for personal purpose or business purpose, doesn't matter if there is consideration, it is always going to be considered as supply only. 7.1AA says that any person other than individual enters into transactions with own members, own constituents for consideration, cash, deferred payment, whatever. It is also going to be considered as supply because this person is a separate entity and the members' constituents will be considered as a separate entity under GST. Talking about section 7.2, supply excludes. 7.2a is the Schedule 3 negative list and 7.3b are extra notified services by government, which is article 243 GW and plus state liquor licenses by government. These are neither supply of goods nor supply of services, hence no GST is going to be charged. Talking about Schedule 3 negative list. Schedule 3 negative list FB changes. Services of funeral, mortuary, burial, crematorium, including transportation of deceased, bond-to-bond transfer, court tribunal, high sea sale, actionable claim other than specified actionable claim. What are specified actionable claim, ma'am? Lottery, betting, gambling, online money gaming, horse racing and casino. These are supply. Other than this, any actionable claim is not a supply. One non-taxable territory to another non-taxable territory without goods entering into India. Government, employer, employee and sale of land and building subject to Schedule 2. Why subject to Schedule 2, ma'am? Because if consideration is before completion certificate or first occupation, whichever is earlier, then it is construction services. After this, it is neither goods nor services, no supply. Right, ma'am. 2 zeros getting mixed become 8. Section 8A composite supply, taxable at principal rate of tax as they are naturally bundled in ordinary course of business, supplied in conjunction with each other. One of them is principal, whatever is principal, entire rate applies of that thing only. And 8B talks about mixed supply, supplied for a single price which is not composite, not naturally bundled. Then you have to simply take the supply attracting highest rate of GST. 9 is the charging section. In IGST Act, we have corresponding section 5, that is levy and collection. 9.1 talks about normal levy. What is normal levy? GST is going to be levied on all goods or services. All goods services except what, ma'am? Except alcoholic liquor for human consumption. Value according to section 15. Rate whatever is notified. Maximum notification can be 20% for CGST, 40% for IGST. 9.2 talks about high speed diesel, motor spirit, natural gas, aviation turbine fuel, petroleum crude. GST not applicable today, will be applicable from a future date. 9.3 talks about reverse charge mechanism on goods, on services. Services, we saw goods transport agency. If supplied to specified people, they are CF scrub. GST is going to be charged. If GTA is not registered or not opting for FCM option, then the specified people will pay under RCM, otherwise GTA can collect under FCM. For all people other than CF scrub, transportation services are exempt only. Legal services, advocate to business entity having preceding financial year turnover greater than registration limit, RCM is going to apply, otherwise exemption. Same to same provision for arbitral tribunal. Then sponsorship services, any person to body corporate or partnership firm, any person to body corporate or partnership firm, sponsorship services, GST liable under RCM. Then director giving services to a company or a body corporate not in the nature of salary, then RCM. Insurance agent to insurance company, recovery agent to bank, NBFC, financial institutions, then individual direct selling agent to bank, etc. Then business facilitator never takes liability, business correspondent always takes liability. Members of overseeing committee to RBI, also RCM. Then any photographer, artist or composer or lyricist, etc. giving rights of their original work. Any writer giving rights, author giving rights to publisher. But for author there is also FCM option just like GTA, but you cannot withdraw within 1 year if you are opting for the same. Then we have renting of motor vehicle designed to carry passengers, cost of fuel also included. In that case, you have to see three conditions: that supplier has to not be a body corporate, recipient has to be a body corporate, and the rate for the renting of motor vehicle is 5%. If all this is yes, then RCM, otherwise FCM is going to apply. Then security personal services, any person other than body corporate, giving services to a registered person, security personal services, RCM is going to apply. Security lending scheme, lender giving services to borrower, RCM is going to apply. Have we missed anything? Yes. Government. Ma'am, government services other than MAY25, what to do of MAY25? We are seeing exemption. Now, my Ministry of Railways normally always forward charge mechanism. There are some small new exemptions being added. P is Department of Post. Now, if it is small up to 10 grams of the envelope, etc. things, then exemption. Otherwise, speed, post, express, parcel, life insurance agencies, everything that is done by post offices, FCM only. Then aircraft, vessel, transportation of goods, passengers, everything is forward charge mechanism. Talking particularly about immovable property, renting by government, if done to registered person, RCM, unregistered person, FCM, up to 5,000 rupees exemption is there. Now, not government, if any normal person is renting, then ma'am, if it is renting of residential dwelling by any person to unregistered person is exempt only. Then renting of residential dwelling by any person to a registered person, you have to see if the purpose is somewhere related to business, then RCM. But if you are taking renting for residential for personal purposes, then also it's going to be exempt only. Talking about commercial properties which are not residential, commercial properties, ma'am, if rented by supplier is a registered person to anyone, FCM is going to apply. But if unregistered person is giving commercial property on rent to an unregistered person, no GST. To a registered person, here RCM is going to apply. Then these were all these services notified under reverse charge mechanism. Then talking about goods which are notified under RCM, ma'am, 1, 2, 3, 4. 1, 2, 3, 4. What was 1, ma'am? Registered person to registered person, PSLC. RCM is going to apply. What is 4, ma'am? Agriculturist to registered person. 4 things, agriculturist to registered person, RCM is going to apply. 1 is cashew nuts, raw cotton, tendu leaves, tobacco leaves. Once again, ma'am, raw cotton, tendu leaves, tobacco and cashew. 4 things, agriculturist to registered person, RCM is going to apply. Then 2 things were, ma'am, URP to RP. URP to RP, RCM is going to apply. 1 is metal scrap and 1 is essential oil. Metal scrap and essential oil, URP to RP, RCM is going to apply. And 3 things which are specifically particular. 1 is the person making silk from raw cocoons, RCM is going to apply if supplying to registered person. Second, government supplying lottery tickets to lottery distributors, RCM going to apply. And government selling seized goods, vehicles, etc. to a registered person, RCM is going to apply. Then talking about 9(4), specified people giving specified goods or services to any unregistered person giving specified goods services to specified registered person, then RCM is going to apply. As of now, only real estate sector has been notified here. For cement 28%, For capital goods, applicable rate, and input services, at least 80% has to be taken from registered person. If there is a shortfall from 80%, then on the shortfall 18% RCM you have to pay. Then 9.5 talks about e-commerce operator, housekeeping, accommodation, transportation, restaurant. A supplier to be hatre, a recipient to be hatre, or you can remember it as hater also. So 4 services, housekeeping, accommodation. If original supplier is liable, let original supplier be liable. If original supplier is not liable, then the e-commerce operator is going to collect tax and pay under section 9.5 from the recipient for housekeeping and accommodation. But transportation, restaurant, you don't have to see whether original supplier is liable or not. Always eco is going to be liable with one exception. Restaurant, if it is in a hotel specified premise, declared tariff greater than 7,500 per unit per day, then 9.5 will not apply. Restaurant itself will be collecting GST, and if the transportation is done via omnibus and the supplier is a company, then 9.5 will not apply. Otherwise, always transportation, restaurant, you don't have to see whether supplier is registered or not. Always eco will only collect tax and pay to government under section 9.5. Perfect, ma'am. After that, G 10 different types of tantrums to pay less taxes. 10 बहाने करके भरेंगे कम tax. Section 10 composition levy. Section 10 composition levy. 10.1 and 10.2 is for goods and restaurant. 10.2a is for normally services, but of course there is no restriction on goods also. But here, other than goods and restaurant, if you want to provide some other services, maximum preceding financial year turnover 10% or 5 lakh rupees, whichever is higher, you can provide. Turnover limit here is 50 lakh, here 1.5 CR, but for special category states, some we saw no asthma in Uttarakhand and Jammu Kashmir. No asthma. No asthma in Uttarakhand and Jammu Kashmir were the 11 special category states. But here you don't take Assam, Himachal Pradesh and Jammu Kashmir. You exclude Assam, Himachal Pradesh and Jammu Kashmir, which means Nagaland, Sikkim, Tripura, Manipur, Mizoram, Meghalaya, Arunachal Pradesh and Uttarakhand. For these 8 states, we are going to say turnover limit here is 75 lakh. For everyone else, it is 1.5 CR. And for 10 to A, though you be special category or not special category, for everyone it is 50 lakh rupees only. Ma'am, if I am a manufacturer of goods, then 1% of my total turnover. If I am a trader of goods, then 1% of my taxable turnover. If I am for restaurant business, 5% and 10 to A, 6%. All these taxes a composition person has to pay out of own pocket. You cannot take ITC, you cannot collect GST from your customers. From your cash ledger, you have to pay all these taxes on your own. If you are a CTP or an NRTP doing interstate supplies or a supplier of service supplying through e-commerce operators, or you are a manufacturer of ice cream, pan masala, tobacco, aerated water, fly ash, bricks, blocks, aggregate, siliceous metals, earth, earthen roofing tiles, etc. All these situations make you ineligible to opt for composition scheme. When you are shifting from regular to compo, you have to reverse your ITC within 60 days. When you are shifting from compo to regular, you can avail ITC within 30 days of shifting. Regular to compo, you can only shift from 1st April. Compo to regular, you can shift any time during the entire financial year. Okay, ma'am. 1 balle balle. 1 balle balle. Why balle balle? Because we got exemption from GST. Now we saw multiple blocks in exemption: religious, charitable, healthcare, education, insurance, construction, other services, transportation of goods, transportation of passengers, government services. A lot of services under exemption, not possible of course to revise as of now. Then ma'am, 12. जिनकी की तो 12 बजी है. At 12 o'clock, the time changes. Time. So 12 o'clock is time of supply for goods, 13 is time of supply for services, and 14 is the rate change section. Rate change simply says that out of supply, invoice and payment. If 2 things are before rate change, you take old rate. If 2 things are after rate change, you take new rate. You fix supply, whatever matches with supply becomes the time of supply. Now talking about 12 and 13, ma'am, 4 subsections are ditto same. 1 simply says that liability to pay will arise as soon as time of supply comes. Then 4 says that for vouchers, if they are identifiable, issue date is the time of supply. If they are not identifiable, then redemption date is the time of supply. Residuary point says that if not falling anywhere, then for registered person due date, and for unregistered person whenever you are actually making the payment. 12(6)(13)(6) says that if there is any interest, penalty, late fees, etc. received, the day on which you actually receive this is going to become your time of supply. Now talking about section 12(2), forward charge mechanism, time of supply. You simply have to take invoice or last date to issue invoice, whichever is earlier. No need to even look at the date of payment. But if I am a composition person or a supplier of specified actionable claims, then in that case, I am going to see invoice, last date to issue invoice, or date of payment, whichever is earlier, which means I receive any advance, time of supply will come. Here, advances are not taxable for normal people. For small advances up to ₹1,000, you still have an option to ignore the date of payment. What is the date of payment, ma'am? Book or bank, whichever is earlier. Talking about 12(3), which is reverse charge mechanism. The day on which I receive goods, the day on which I make payment, and 31st day from the invoice, date of invoice which the supplier has issued, whichever is earlier is the time of supply. If nothing is available, the day on which I make purchase entry in my books, that becomes the time of supply. Talking about services, 13(2) forward charge mechanism. Is the invoice issued within time according to section 31? Yes, then you take invoice payment earlier. No, then you are going to take service or payment, whichever is earlier. 13(3) talks about reverse charge mechanism. Because you don't actually receive the services, you can just feel the services. Therefore, you ignore the receive point. So, payment and 61st day from invoice, whichever is earlier, becomes your time of supply. If nothing is identifiable or ascertainable, whenever you made entry in your books for purchase, becomes your time of supply. The day on which recipient makes the entry becomes the time of supply. Okay, ma'am. Then we go to section 15, which is value of supply. One whole and sole section carrying the entire weight of value of supply. Ma'am, 15(1) says transaction value, that is price actually paid payable. Recipient is not related and money is the sole consideration. Plus, I am going to do 5 inclusions of 15(2) and 3 exclusions of 15(3). Exclusion says that if it is pre-supply discount at the time of supply discount shown in invoice, you can bindas reduce it from the value. But if it is post-supply discount, there has to be a prior agreement. It has to be linked to invoice and recipient has to reverse proportionate ITC. If all 3 conditions yes, then I can reduce this discount. Otherwise, no, only commercial without GST credit notes can be issued. Talking about 15(2) inclusions, if there are any taxes other than GST and TCS, other than income tax, TCS and GST, you have to include all taxes relating to your supply in your value. Obligation of supplier fulfilled by recipient. Incidental expenses incurred by supplier, recovered from recipient, charged from recipient, billed to recipient are going to be added. Then, ma'am, if there is any interest, penalty, late fees related to the original supply. And last is non-government price linked subsidy will also form part of value of supply. Ma'am, if I am unable to apply these things because either the recipient is a related person or money is not the sole consideration, what to do? I am going to go and see the valuation rules. Rule 27 says when money is not the sole consideration. Rule 28 when dealing with related person or distinct person. Rule 29 for supply between principal and agent goods. 30 is monetary value, that is cost into 110%. 31 is ultimately best judgment basis if nothing is identifiable here. Agent, you simply have an open option to take open market value or 90% of whatever is being charged from the ultimate customer not being related. If nothing is available, you can simply apply Rule 30, Rule 31. Rule 28, we have Subrule 1 and Subrule 2. Subrule 2 is for corporate guarantee between related companies and in that case per annum. Per annum, either you take 1% of the guarantee amount or actual consideration, whichever is higher. And normal 28(1) says that when you are dealing with your related or distinct person, is the open market value available? No, ma'am. Is like kind quality available? No, ma'am. Then simply Rule 30, Rule 31. Also, you have an option. If your recipient is further supplying these goods to customers, you can take 90% of whatever is charged from the customer, whichever is beneficial out of 2, you can opt. But you can forget simply everything and take whatever you declare in your invoice as the value of supply if full ITC is available to my ultimate recipient. Talking about Rule 27, if money is not the sole consideration, open market value available, take that. Not available, then what money I have received plus fair market value of additional consideration. Not available, take like kind quality. Not available, take money plus monetary value of consideration. Not available, then last option is to go by Rule 30, 31. You will always have to follow the chronology here. Then ma'am, rule 32, we saw 5 special things for which optional special valuation method is available. One was forex, then life insurance, air travel agent, forex, air travel agent, vouchers and second hand goods. Forex, we also had two options. One was chart method, one was table method. Then air travel agent, domestic booking 5%, international booking 10%. Life insurance, only risk 100%. Single annuity plan 10%. Others 12.5% for subsequent years, first year 25%. Savings policy, if prior intimated, then premium received minus the amount allocated to investment becomes your value of supply. Vouchers, if the voucher simply you have to take at the redemption value. Second hand goods, ma'am, I will take simply selling price minus purchase price, whatever is my margin. But the condition is I should not have availed ITC at the time of purchase. Then on this margin only GST is going to be charged and not on the entire value. Then rule 33 talks about pure agent. Whatever is done in capacity of a pure agent, I am incurring expenses because of a contract between recipient and a third person. I am nowhere involved. I am not taking any benefit, not taking any advantage, charging the exact amount that I have incurred if all these conditions satisfied, and I am showing separately that amount in my invoice. Then whatever I do as a pure agent will not form part of my value of supply. 34, if transaction is not happening in INR, then for goods, you will take CBIC rate to convert. For services, you will take generally accepted accounting principles rate as on time of supply to convert into INR and then determine value and the tax payable. Rule 35 is simply back calculation, how to find out exclusive value from an inclusive GST value given. Perfect, ma'am. Then section 16. As soon as I turn sweet 16, my family starts to put conditions and restrictions on me. Section 16. 16.1 talks about eligibility. I have to be a registered person plus whatever I'm doing has to be in course furtherance of business. 16.2 talks about conditions. Conditions, ma'am, first is I should be having invoice or a valid tax paying document. Supplier has to have furnished the details about the same in GSTR 1. I should have received goods, services or both. The ITC communicated to me should not be restricted. My supplier has paid the taxes to government subject to section 41 and I also have filed my valid GSTR 3B in order to avail the ITC. Section 41, read with rule 37A, says that today I can take ITC on self-assessment basis if it is showing in my 2A, 2B. If it is showing in my 2B, and I can wait for my supplier to file 3B. After the end of financial year till 30 September, I will wait for my supplier that he files 3B and makes the payment to government. If done, everything okay. If not done, I have time till 30 November to reverse my ITC without interest. After this date, interest will start to apply from utilization till reversal 18%. Rule 37 says that from the date of invoice, within 180 days, you have to make the payment to your supplier. Otherwise, whatever ITC you have taken, you have to reverse in the immediate next 3B as soon as the 180 days expire. However, for Schedule 1 services, RCM services or goods, or if the payment is made to third party, Rule 37 is not going to apply. 16.3 says that 16.3 simply says that you cannot take depreciation if you want to take ITC of GST component, or you can take only depreciation and not ITC for the GST component of any asset. Then 16.4 is last date to avail ITC. Simply it is 30 November or actual date of filing annual return, whichever is earlier. Even if I do self-invoicing, whatever is the date of my actual self-invoicing, according to that date only I have to see the last date here to avail ITC. 16.5 not in your syllabus, and 16.6 says that if there is a cancellation of your registration and then subsequently there is revocation of cancellation, all the eligible ITCs pending, then you can now take your original time limit to you anyways have 30 November or actual date of filing annual return, whichever is earlier, or you can compare this with revocation. After revocation 30 days, whichever is later, you will be eligible to take your all the ITCs for this period during cancellation till revocation. Okay, ma'am. Section 17 talks about Satara Pe Khatara. Danger number 17, apportionment of credit and blocked credit. Blocked credit is simply the list of 17.5. Motor vehicle, 13 passenger, insurance, service, repair, maintenance, aircraft, vessel, food, beverages, outdoor catering, beauty treatment, cosmetic, plastic surgery, life insurance, health insurance, or leasing, hiring of these motor vehicles, ITCs of whose is blocked, leave travel concessions, or personal consumption, goods lost, destroyed, stolen, written off, given by way of free sample, corporate social responsibility services or any activities, then any tax paid under composition scheme, any tax paid because of fraud, etc., NRTP, purchasing anything except import of goods. All these things are blocked for credit under GST. Construction works contract of immovable property if done on own account. Plant machine ITC is available. But we say that entire land building, civil structure, telecommunication tower and pipeline outside the factory are not plant machine. So if you are constructing them, ITC will be available, will not be available. It is going to be blocked. Otherwise than that, for plant and machine construction or works contract, ITC is going to be available for you. Apportionment simply, rule 42 we have for input services, rule 43 for capital goods, and rule 38 particularly a special optional procedure for banks where they can take 50% ITC, let go 50% ITC. Perfect, ma'am. After that, section 18, special circumstances. If whenever I am converting myself from taxable to exempt, exempt to taxable, compo to regular, regular to compo, whatever it is, whenever I am trying to avail ITC, government is wanting me to do 5% quota reduction calculation, and whenever I want to reverse the ITC, whenever I want to reverse the ITC, they want me to do 60-month proportionate calculation. Is the simple trick for you to remember. If I am selling or disposing my capital assets, then in that case, whatever was tax paid at the time of purchase minus 5% per quarter or tax on transaction value, whichever is higher, you will have to pay for capital goods. If I am taking fresh registration for the first time, I only get ITC of inputs, no input service, no capital goods, and this also should not be older than 1 year. Should not be older than 1 year, then only inputs ITC I can take for fresh registrations. Perfect, ma'am. Then smallest number 1, biggest number 9. Smallest number 1, biggest number 9. छोटे से job worker पे बड़ा सा principle. So section 19 are provisions of job work along with section 143 which is the special procedure. Right, ma'am. So the principal can send the goods to job worker without paying taxes, simply without issuing invoice on the cover of delivery challan and e-way bill. Can also send the goods directly from its supplier to the job worker. Job worker will have to return the goods. If inputs hai to 1 plus 1 year and capital goods 3 plus 2 year without paying taxes. Otherwise, if you are returning after this period, then we will assume that on the first day initially when you had sent, supply had already happened. Okay, ma'am. 20 is input service distributor. 21, if I have excess distributed anything, I can do a recovery of ISD. If you are in the same state, you give CSI in the same nature only. But if your branch is in different state, everything will be converted in IGST and then it will be apportioned in the ratio of your turnovers. The ISD credit has to be distributed in the same month. If missed, you cannot later on distribute it. Then, ma'am, 2 to 22, you are earning double, you are a person liable for registration. No MMT 10 lakh, stamp in Uttarakhand 20 lakh, other states only goods 40, otherwise 20. Okay, 22 says liable, 23 says no, not liable. If you are exclusive agriculturist or you are exclusively dealing in non-taxable exempt supplies, no need to take registration. 24 says, hey, shut up. What is this liable, not liable nonsense going on? You just shut up and take compulsory registration. If you are under I-9 creation, interstate supply, exception is services and handicraft goods. 9.5 CTP, exception handicraft goods. R is inward RCM, e-commerce operator, agent, TDS, ISD, OID, AR, online money gaming and NRTP. These people are required to take compulsory registration irrespective of their turnover. Okay, ma'am, we will take, but at least tell us the procedure. The day on which you become liable, within 30 days you have to apply. If you do so, your actual date of becoming liable becomes your effective date. If you apply after 30 days, then in that case, whenever you actually receive the RC becomes your becomes your effective date of registration. Right, ma'am. Then we have Rule 10A. Aadhaar authentication, Rule 10A, bank account, the day on which I get RC within 30 days or whenever I am filing my first GSTR1, whichever is earlier, I can furnish my bank account details. And Rule 10B is for revocation, cancellation and refund application. If I want to make, I will have to mandatorily get my Aadhaar authentication done. Normally, if I am opting for Aadhaar authentication, RC given within 7 days. Otherwise, physical verification, etc. required. Therefore, RC given within 30 days. Both situations, if I am receiving any notice, I have 7 days time to reply. After I reply, officer has 7 days time to take the action. Perfect, ma'am. Then, 26 says that, oh my god, this big procedure, we cannot do it twice, therefore deemed registration. 27, casual taxable person, non-resident taxable person. 5 days prior I have to apply, maximum 90 plus 90 days I get registration, advance tax everything I have to deposit. Okay ma'am. Then 28, 29, 30, amendment, cancellation and revocation of cancellation. Within 90 plus 180 days of cancellation order I can apply for revocation. Amendment, if core field you have to take approval, non-core field you can straight away do yourself, but if there is a change in PAN or state, then you will have to take a new separate registration, cancel the existing one. Cancellation, if you are closing your business, opting out of voluntary registration on your death, if your legal heirs don't want to continue the business for multiple reasons, in genuine cases you can go get your registration cancelled, or your proper officer can also suo moto cancel your registration. If you are not doing business from declared place of business, it's been 6 months, you have taken voluntary registration, not starting your business, you took registration by means of fraud, you are violating bank account detail rule, you are violating rule 86B, you are violating section 16 conditions, you are showing more sales in one compared to GSTR 3B, you are violating anti-profiteering provisions, you are issuing fake invoices, or monthly return filer 6 month, quarterly return filer 2 tax period, after revocation it's been 30 days, you are still not filing your returns, you started voluntary business and it's been 6 months, you took voluntary registration, it's been 6 months, you're not commencing business, or you are a composition person and your due date is already due by over 3 months, you are still not filing your GSTR 4. All these situations also, proper officer can suo moto cancel out your registration. Okay ma'am. Then section 31 talks about tax invoice, last date to issue tax invoices. Ma'am, if the goods are involving movement, before at the time of removal. No, then before at the time of giving delivery. If it's continuous supply of goods, successive statement payment involved. If the goods are sent on approval return basis, 6 months or actual time of supply, whichever is earlier. Talking about services, ma'am, for continuous services, due date of payment ascertainable, that becomes last date to issue invoice. Not ascertainable when you receive actual payment, but if the payment is linked to some event, the day on which that event happens becomes your last date to issue tax invoices. Then talking about if the service ceases in between, up to the date of cessation, you have to issue tax invoice immediately and normally within 30 days. But for bank, NBFC, financial institution, insurance company, they get time of 45 days to issue tax invoices. Ma'am, if my RC is received here but effective date of registration is here for this period, within 1 month from here I will have to issue revised tax invoices. Then if the value of supply is less than 200, recipient is unregistered, not wanting invoice, I may decide to not issue invoice only. End of the day, I can issue consolidated invoice, but this option is not available to multiplex screen people. Then if I am making exempt supplies, I am a composition person, I issue bill of supply and not a tax invoice. When you receive advance, you issue receipt voucher. If you have to return your advance, you issue a refund voucher. For RCM payments, you issue payment vouchers. Then e-invoicing 5 crore, dynamic QR code 500 crore. For e-invoicing, B2B applicable, B2C not applicable, import not applicable, export applicable, ISD not applicable, e-commerce operator applicable, RCM outward applicable, RCM inward, e-invoicing not applicable. Perfect ma'am. Then section 32, मुक्का मार के 32 से तोड़ देंगे, will break all your 32 teeth. Hey unregistered person, you are not authorized to collect unauthorized taxes. 3333, whatever document or invoice you are issuing, please make sure to mention the amount of tax on the same. 34, credit note, there is a last date to issue, 30 November, actual date of filing annual return, whichever is earlier. Debit note, because you are increasing sales, government is happy and they are not giving you any time limit to issue your debit note. Then ma'am, 35 is accounts and records. Every registered person plus every transporter and owner operator of warehouse godown has to maintain accounts records. Can be in manual form also, can be in electronic form also. If it is electronic, you have to give passwords, access, everything to the officer if asked for. Till what period I have to maintain my accounts records? 36 into 2, 72 months. So from the due date to file annual return for that year, from the due date to file annual return of that year till 72 months, you will have to retain your accounts records. But if any proceeding is going on, then after the proceeding ends, even after 1 year from there, you have to maintain accounts records. Basically, whichever is later, you are going to preserve all your accounts records. Then ma'am, Section 37 to Section 48, everything is returns chapter that we will see today. Section 37 to 48, everything is returns chapter. Then 49 is payment of taxes. 49 is payment of taxes. What does payment of taxes say, ma'am? cash ledger, credit ledger, liability ledger. TDS, TCS, RCM, composition, any amount other than tax, everything has to always be paid using cash ledger. Liabilities simply will be credited in your liability register, and then you will use your cash and credit ledger to set off these all the liabilities. The day on which you whenever you generate a challan, it is valid for 15 days. You can use challan to make the payments. Always you have to use NEFT, RTGS, net banking, etc. If you want to pay over the counter cash, then the limit is 10,000 for per tax period per challan. Maximum 10,000 over the counter is allowed to you. You can always file PMT09 in your cash ledger to transfer amounts from one register to transfer amount from one major minor head to another major minor head, but it is only and only for cash ledger, not for credit, not for liability. Right, ma'am. Half century has come. I have started to develop interest. Half century, I have started to develop interest. Section 50, interest. If it is short payment, late payment, interest is 18% per annum. And if it is ITC wrongly availed as well as utilized, very important. Only availed, no interest. Availed and utilized, then also interest at the rate of 18% is going to be applicable. Here the amount will be applicable on a net amount that you are paying from your cash ledger by paying new challans. Only on that net amount interest is going to be applicable if you are late filing your return. Right, ma'am? Done. Then after that, yes, 51 and 52. 51 में 2, 52 में आधा, 51 में 2, 52 में half. Section 51 TDS, the rate is 2%. Value has to be greater than 2.5 lakh. Only taxable values will be considered here. TCS, there is no threshold. Always if 9(5) is not applying and transaction is happening through an e-commerce operator, not being an agent, payment routed through e-commerce operator, then in those situations on sale minus sale return, net amount 0.5% TCS is going to be collected. No TDS, no TCS for a supplier who is unregistered or for any exempt, nil rated, non-taxable or RCM supplies, no TDS, no TCS. Then GSTR 7 is the return for TDS people, GSTR 8 is the return for TCS people. Done. Section 59, self-assessment. Section 59, self-assessment simply says every person has to do its own assessment and file GST returns accordingly, pay the liabilities according to whatever you declare as your sales and your purchase. Section 60 says that provisional assessment, saathe buddhi naathe. Provisional assessment says that if I am unable to determine rate or value, only two things. If I am unable to determine rate or value, I can apply to officer and ask for provisional assessment. The proper officer will give me an order. If he wants to ask me some other things, want some document, he will ask, and ultimately a provisional assessment order will be filed. From there, 6 months plus 6 months plus 4 years is the time limit within which final assessment order should be issued. At the time of issuing provisional assessment, if the officer thinks, he can ask you for bond security also for the amount differential that may be ultimately finalized. Right. Now, final assessment, again there are two possibilities. Either I had initially short paid or I had initially excess paid. Tell me the rate of interest here. If I had short paid initially, now I will be required to pay the differential taxes according to the final assessment along with 18% per annum interest, that too starting from the original due date till the date of actual payment. So your date of provisional assessment order irrelevant, final assessment order irrelevant, simply which was the original due date to pay these taxes, from there till the date you actually paid these taxes, 18% per annum interest is going to be applicable. Talking about excess payment, after final assessment, the day on which I make application for refund, if I get the refund within 60 days from there, I am not going to get any interest. Whatever is the period above 60 days from my applicable that the government gives me refund, for that excess period, 6% per annum interest will be given to me. After I settle everything, I can go and again ask for my bond security back to get cancelled. Right. Section 61 talks about scrutiny of returns. Is it compulsory or is it mandatory that every return that we file is going to be scrutinized only? The answer is no. Proper officer may. The important word here is proper officer may, on some risk analysis basis or maybe some random basis or some data evaluation basis, select some returns that he wants to scrutinize. If there is any discrepancy found, notice will be given to you, to which you have to reply. Now there can be 4 possibilities in your reply. Either you are paying the differential amount, saying sorry, accepting your mistake, matter over. Paying differential amount, interest, penalty, whatever is applicable, and the matter is closed. Or I am accepting, yes, there's a mistake, but I am not taking any action only. Then what to do? I am accepting the discrepancy, but I am not taking action. This is a situation where the case remains open. Or let us say, I am giving an explanation to this notice that I have received. Now again, my explanation might be satisfactory to officer, then again the matter is over. So 2 situations matter will be over. If I am paying and accepting, or I am explaining and the officer is satisfied. But 2 situations the matter will remain open, when I am accepting but not paying, not taking any action, or whatever explanation I am giving is not satisfactory to the proper officer. In these 2 situations, any one out of 4 recourse can be taken by the proper officer. What are the recourses available here? Audit under section 65, special audit under section 66, or inspection provisions, or even demand recovery provisions can be invoked and started if I am not able to reply properly, or I am accepting but not paying anything to government. Then section 62 was about best judgment assessment. Now in best judgment assessment in itself has 2 sections, section 62 and section 63. 62 is for people who are already registered but not filing their returns. Registered but not filing the returns, and 63 is for people who are already unregistered. Maybe they are liable for registration but they have not taken, or they had taken but due to some reason, section 29, their registration got cancelled. As of now, they are unregistered. Right. Now in this situation, the due date to file annual return for that particular year, within that due date, within 5 years, anytime your best judgment assessment can be done. But here, when you are a registered person, before doing your best judgment assessment, you will be given with one opportunity, that is notice under section 46. So a notice under section 46 electronically only, automatically by the system is issued to you if you are not filing your returns, and they give you 15 days time to file your pending returns. If you are filing within 15 days, very good. If you are not filing within 15 days, then your case becomes open, that proper officer can anytime do your best judgment assessment. Here, so because you are unregistered, they cannot even give you a chance to file return. They will just give you an opportunity of being heard, that we are wanting to do your best judgment assessment. You tell us why not. Again, 15 days time you get. Both the situations, if this 15 days time is over, your case is now completely open for officer to anytime do your best judgment assessment, maximum till 5 years from the due date to file annual return for that particular period. Here, once your best judgment assessment is done, no withdrawal is possible. You will have to pay the taxes accordingly only. But here you have an option of withdrawal also available with you, that even after issuance of order, if you are filing your returns within 60 days, there is also some further additional late fees prescribed, with which you can also extend this time. But yeah, normal time says that if even after issuance of order within 60 days I am filing my return, then also I will not be required to abide by the best judgment assessment. This best judgment assessment order will be deemed as if it is withdrawn and it was never issued only. Only my taxes, interest, late fees, etc. will continue and no penalties. Right. Then section 64 talks about summary assessment. Summary assessment simply says that I have proper evidence that the opposite taxpayer has actually incurred a liability, as well as there are reasons to believe that if I am not catching this person now, this person might leave, fly away, run away, and it is ultimately going to affect the interest of revenue of India. In that situation, the officer can ask for permission from the higher authority and carry out summary assessment in a very fast manner of that taxable person. Now, because this summary assessment is done in a hurry, there are possibilities that summary assessment order is not appropriate. In that situation, either I as taxpayer can apply to officer, or the officer suo motu can also recognize that yes, this is not proper, and the order can be withdrawn, and then the full procedure under section 73, 74 can be followed to issue you the demand order. And this particular assessment not required that mandatory has to be done of taxable person only. If the person in charge is not found, if the owner of the goods or services is not found, we can simply carry out the summary assessment on the person in charge at that point of time, which means, let's say your goods are caught and we are not able to determine who is the owner. Even the warehouse operator, go down owner, or the transporter can be trapped under this section 64 of summary assessment. Right, ma'am. Then talking about section 65 and section 66, this is audit done by department, and this is special audit where department hires a chartered accountant or a cost accountant to carry out the audit. Now, even if your books of accounts are already audited, maybe for income tax purpose, maybe for company law stat compliance purposes, it doesn't matter at all. We can still, for a particular reason, carry out your GST audits here, right? All the time before starting off audit, you will be given some time to prepare for your accounts records, as audit is not equal to raid, right? Audit is a very friendly process where they will in advance inform you that we are coming, we are going to audit your books of accounts. You get time to manage everything, and then your audit will be started, right, ma'am? What is the time limit? What is the time limit within which my audit should be completed here? 3 months, and here it is 90 days. My audit should be completed and report should ultimately be furnished. Now, after completion of audit, is it 3 months and 90 days? I'll just confirm it once. Is the time limit that I'm saying correct? I just have to check it once. Give me a second. Yes, perfect. In section 65, you have to complete the audit within 3 months and plus 6 months extension is there. And in special audit, yes, perfect, within 90 days and plus 90 days extension is also there. All the expenses, etc. To pay to chartered accountant are borne by the department, obviously. Perfect, ma'am. If after the audit findings are out, we feel as if it is necessary to carry out the inspection or search or demand operations on this person, it can be done after the audit also based upon the findings. Right, ma'am. Then talking about section 67, inspection, search and seizure. Section 67, inspection, search and seizure. Now, search is typically raid. Inspection is comparatively a very softer provision compared to search. So, inspection can be done of the registered person also, owner of warehouse also, transporter also. If the officer has reasons to believe, first of all, he has to take a written permission from at least joint commissioner or above officer, and the permission to carry out inspection will only be given if the taxable person has done anything out of cess. This was asked in, I guess, very recent examination only, that when can operations under section 67 of inspection be carried out? When you have done something out of cess: contravention of the act, evasion of taxes, suppression of excess ITC. If you are claiming excess ITC, you are suppressing stock, you are suppressing turnover, or you are contravening the provisions of the act with intention to evade the taxes. If you are doing anything out of these 4 things, the joint commissioner or the above officer can give a written order to the officer to carry out inspection at your premises. If you are owner operator of warehouse, go down, or a transporter, and you are dealing with the goods on which we believe taxes are evaded, or your accounts are showing as if the taxes are going to be evaded, in those situations, the inspection of even a warehouse owner or a transporter can be carried out. Right, ma'am. Then if we talk about search operations, search is typically a raid where they will have a search warrant. What are the contents of search warrant? Even this was a very recent question in examination, that what are the contents of search warrant? VPN were the contents of search warrant, where with the search warrant they can come at your premises, they will show you their ID cards, they have the power to break the doors and almirahs if you're not allowing them, etc., etc. All the basic search operations that we understand. Also, if the person is not cooperating or anything like that, the officer have full authorities, and whatever goods they are finding there, they have the power to also seize those goods, confiscate those goods, and take those goods along with you in the search operations. So we understand search is a very, very, very strict strict provision compared to the inspection. What was section 68? Ma'am, 69 minus 168, e-waybill. E-waybill is basically inspection during movement. So when your goods are moving from point A to point B, in this transit, your goods can be anytime inspected by the proper officer. You always have to have an e-waybill. 50,000 was the limit, etc. We all understand this. After that, section 69, your favorite number 69, handcuffs, is the section of arrest. So proper officer also has the power to arrest in cases where you have committed offences at least of 2 crore rupees. However, if you are a repeat offender, 2 crore doesn't matter. For a repeat offence, even on 10 lakh rupees, you can be arrested. Right, ma'am. Also, normally, except for some offences under GST, mostly all are non-cognizable and bailable only. Non-cognizable means they cannot arrest you without the warrant, and bailable means you can also be bailed by the additional commissioner, deputy commissioner. However, if the amount is greater than 5 crore, and in some situations we will study in the chapter of offences and penalties that the offence can also become cognizable and non-bailable, that you will not even get a bail, you will be compulsorily produced before the magistrate, as well as you can be arrested even without a prior warrant with the officer. Criminal Procedure Code always applies. We understand this during arrest operations. Then section 70 simply says that power to summon someone. Section 70 is power to summon. What do we understand by power to summon? This was also there in some of the recent RTP or MTP. What is power to summon? Power to summon simply means that proper officer can call a person, ask for documents, ask for oath, ask for some questions to that person, and that person would be duty bound to cooperate. However, officer also needs to keep this thing in mind, that the language of summon should not be very harsh. You are not doing something wrong with the person, you are just calling the person, asking for documents, asking some questions, and that person is going to answer to you. So no need to unnecessarily use any harsh language. You have to respect the time. So at the time that officer is giving, both the parties should be present there so that none of their times is wasted. If you are thinking to call on someone, a very big personality, as in some director or a CEO or a CFO of a public company or a very big company, you have to have certain evidences to believe that yes, that person is actually involved. Otherwise, it might unnecessarily affect the working of economy. Today, if you listen that Mukesh Ambani has been summoned by GST department, obviously overnight the share price of Reliance will fall, and ultimately a lot of common people are going to suffer because Sensex, Nifty, etc. will fall. Right, ma'am. So these were some guidelines that you need to follow under summon. You cannot even call full books of accounts from the person. You need to ask for some specific document that you are requiring from that person. Right. Then section 71 talks about a list of I am actor, that if officer wants, the officer can access your business premises, ask for your income tax report, then your annual accounts, your audited accounts, your cost audit report, your trial balance, whatever documents you are submitting on the portal. All of these things can be asked by the proper officer, and again you will be duty bound to provide those documents if the officer is accessing your business premise for any of this particular document. Then section 72 simply says that officers to assist. So if GST officer is going for any search operation or inspection operation, etc., the local officers, the village officers, the policemen, the railway officers, the person responsible for collecting land revenues, etc., all of these general officers are going to help or assist the GST officer. They can also accompany the GST officer for any of these inspection or search operations. Right, ma'am. Then section 73, 74 was for demand provisions. 73 is for bona fide mistake, where you are not involved in fraud, suppression of fact, or willful misrepresentation or willful misstatement. However, section 74 is when you are actually wanting to do, you were actually engaged in some fraud or suppression of fact or willful misstatement. Even if a notice initially is issued under section 74, it is established that there was some short payment or there was some ITC erroneously taken, refund erroneously taken, but it was not established that there was fraud. The notice can also be converted to notice of section 73. However, in that situation, you will have to respect the original time limit under section 73. Otherwise, your proceedings will be hit by the time limitation and the proceeding ultimately will have to be dropped. What is the time limit to issue show cause notice here under section 73-74, and what is the time limit to issue assessment order here under section 73-74? Quickly tell me in the comment section, everyone. Quickly in the comment section. Ma'am, 2 years 9 months. 2 years 9 months from the due date to file annual return. 4 years 6 months from the due date to file annual return. 3 years and 5 years are the time limits to issue show cause notice and demand orders. This is important. I have already informed you. Right, ma'am. Here, if you are paying taxes before show cause notice or even before order anytime, you can save yourself from penalty, other than if it is a self-assessment tax or amount collected as tax but not deposited to government. Then to always penalty will be levied on you. Otherwise, you can save yourself from penalty here under 73. But in 74, if before show cause notice 15%, after show cause notice 25%. After order within 30 days 50%. After that 100% of the tax penalty you are required to pay under section 74 because you are involved in fraud. Section 75 are and here it was 10% of tax or 10,000, whichever is higher. Also, tell me a very simple thing. If it is the case of IGST, these sections we are studying are of CGST. If it is the case of IGST, are you going to double the percentage, as in should I take 20% and 20,000, whichever is higher, or I will again take 10% or 20,000, whichever is higher? Ma'am, you never have to double the percentage because the tax amount automatically under IGST will be doubled. So without doubling the percentage, the amount will come as doubled only. Only the absolute figures always are required to be doubled whenever we are calculating the penalties. This will be useful for you in offences chapter also, in demands recovery chapter also, and in appeals revision chapter also. Right, ma'am. Section 75 are the general provisions that maximum 3 adjournment possible. Even if interest is not written in the order, still you are required to pay the interest. Then the order amount cannot exceed the show cause notice amount. If it's just a normal delay in filing your returns, penalty does not attract. 73 notice can be converted, 74 notice can be converted into 73 notice. If you have already paid the penalties under section 73-74, then you will not be asked for penalties again under any other act of under any other section of the act, etc. These were all general provisions that we saw in section 75. Then section 76 simply says that if is a self-assessment tax, there is no need to even issue a show cause notice. Straight away your recovery can start. And section 70, if you are collecting some amount as tax and not depositing it to government, then also there is no time limit to issue your show cause notice. But the day on which show cause notice is issued, within 1 year from there, your order also has to be issued. You cannot save yourself from penalty. Always mandatorily you will have to pay the penalty under section 76. Then 77, I got confused which 7 is which 7. So instead of IGST, I thought it of as C plus S, or instead of C plus S, I have paid IGST. The amount is already gone, paid to government. In that situation, I can simply use section 77, pay the right taxes, and then avail the refund of the incorrect taxes paid. Of course, my intention was not to evade taxes anytime, and therefore no interest will be charged according to section 77. Then 78 and 79. 78 says that from the date of demand order, if within 3 months I am not paying the amounts as per the order, my recovery proceedings can be initiated. What are the modes of recovery? Awesome tales are given under section 79. 002 installment becomes 80. 2 installments of 10 is 80. So section 80 talks about installment, where other than self-assessed tax, you can ask for installment, and installment facility will be given to you, but along with interest. This also becomes important for MCQ point of view. I had told you earlier also. Section 80. Maximum 24 installments, interest 18% per annum, not available if the amount is not allowed if the amount is less than 25,000 or you have defaulted earlier, and not allowed even for self-assessed tax. One time even if you default, entire amount pending will immediately become recoverable from you. If you are transferring the property with a mala-fide intention just so that you are not required to pay the demand order, then your transfer of property is going to be considered as void. The remaining things are not that relevant or not that important. Liability to pay in certain cases, very simple. If the business is transferring, up to transfer, transferor, transferee both liable. After transfer, only transferee liable. Then if it is principal agent, everyone jointly severally liable. Liquidation, again liquidator will be liable. Liquidator has to inform about his appointment within 30 days, and the official will get 3 months time to find out if there is any recoverable from the company and inform it to the liquidator. Then directors of a private company company also become liable if they are unable to prove that they were not involved, and they will have to, with their own personal properties also, be liable to pay the GST dues. Partners, all partners jointly severally liable. If you are a retiring partner, you have to inform within 1 month of your retirement, then you are not liable. Otherwise, the day on which you actually inform about your retirement, till that date you will continue to be liable about all the GST dues of the firm. Guardian, trustee, ward of court, trust, on the death of a partner, on the death of a person, HUF, AOP, firm dissolution, guardianship trust, everyone is jointly and severally liable. Only if the business is discontinued after the death of the person, you will be liable only and only up to the estate that you are inheriting from that particular person. This is all the litigation portion that we have already completed.